Welcome back to Trading 360. I'm Nicole Petalidis, live at the New York Stock Exchange. Time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman is here, bullseyeoption.com. Thank you both for being here. How are you feeling about the market today, Alan?
Feeling good. We're we're about 30 away from the all-time forever top in the S&P. So what I look for is a continuation on a weekly basis that we continue to make new higher highs. But for me, I think the focus has been on the VIX. We're down near 1 month lows. The VIX is a huge amount away from its lows. Its lows were 850 back in 2017. So that means there's a lot more downside in the VIX, and we're not complacent. So therefore, more upside in the S&P.
I almost barely remember that. I remember the best trade was buying.
It was a long time
not
ago.
that long ago. Yeah, that was a long time ago. I mean, I remember it at 85,
Right.
when we were going nuts. I remember that pretty clearly. Anyhow, can we get to Apple, which is around 170 today? What are you thinking here?
Well, it's money, money, money. Apple makes a record amount of money. Obviously, they've had some concerns, and I try not to think too much. Your last guest had a lot of thoughts going around. I follow price. And if you look at Apple's been between 170 and 200 for a year. So now we're at that support point. So now I want to do what I call a looky-loo trade. I want to take a shot at it with a limited risk option that's in the money. So what I'm looking at here is this stock is down 11% year to date, whereas the Nasdaq's up 10%. In the last 52 weeks, it's up 6%, but the Nasdaq itself's up 44%. So it's obviously lagged behind the overall market. And with the, you saw the same kind of action in Meta last year, same kind of action in Amazon last year, where people were disappointed, and those Google, they all came storming back. So I think the psychological shift is what I'm looking for. But more important is my indicator, my money flow indicator, is seeing a lot of long accumulation positioning, and they're using options. So I'm following that. And they're building positions, long positions in Apple, which sets up a good risk reward here. Also, the implied volatility is down here at 19. So you want to buy low and sell high. Okay. So the volatility in this stock is at 1 year lows, even though we're at our support base. So that's a positive psychological sign. I'm looking at an option here, a June 160 call, which is what, $11 in the money. That option has 3 months of time, is trading for 15 or so. But what's important here is I'm not looking to hold it all the way to June. If this stock doesn't bounce off this 170, then I want to get out of it. And a May option right now is trading at 14. So if the stock stays in the same place, you lose about $1.50 of time value over a month. So that's why I call it a looky-loo trade, a limited risk trade. And I'm looking to see what happens the next month and see if we get a big bounce off this 170.
Yeah, interesting how you talk about the volatility being near the lows while we're sitting at these support levels. Let's see what Ben Lichtenstein has to say about the chart. Ben?
Yeah, I was actually just looking at this low around 170. I'd have to agree. I think it's a key area right now. The bulls want to hold this, and if they're still in charge here, they're going to have to, right? Flex some muscle at this point, establish a bit of a base here. We'll show you what I mean when I look at a longer-term chart here in just a second. First and foremost, let's begin with some of the selling we've seen in shares of Apple as of recent. Stock has been coming under pressure. This chart shows us a pretty good example of how we've, been trending lower from up around that 200 level to recent lows down again around this 170 area. You can see a recent bottom here that we're kind of retesting. That's a low from the beginning of March. Went ahead and overlaid a couple of areas of consolidation, some lines to help us identify where the market has sort of paused to regain composure, but it hasn't. So far has been continuing along this trajectory to the downside. So you've got a couple key areas to keep an eye on here. I'd be watching this area right around this 175, 180 up into the 184 area. But yeah, as of right now, it does look like the bears still are in control. Value has been and continues to be moving lower at this point, consolidating again around 173. But as I mentioned here, it does look like the longer-term bulls still could be in charge. And it's going to be a key area for them to kind of step up and establish themselves as still in control. You can see that not only are we retesting that March low that I mentioned a minute ago, but we're also retesting the October low. So we've gone from looking at a hourly candle chart here into a daily candle chart here. So this actually goes all the way back to the beginning of last year. You can see the rally stock ran up all the way into that double top. Well, I guess you could call it a triple top up around this 300 level. So you've got a pretty well-defined range established here, right? Lower extreme, the retest of right now that we're at, and then again that upper extreme around 200. Let me show you how along this bullish pattern here, we also had a similar situation playing out. But in this instance, areas of value moving to the upside. So now we're currently holding above, again, key support 170, 164 is kind of the line in the sand, if you want to call it that. Let's take one more step back. I want to show you where we are on Apple relative to the 50, the 200-day moving average, because below the 50, I think a reflection of some of that short-term weakness. Below the 200, reflection of that long-term strength that we're seeing. Again, testing a lower extreme of a wide range balance area that we've been in, but still really no indication no indication that the bulls are not in control here still, Nicole.
All right. Thank you for all of that. So when you think about the bulls, and people love Apple for the long
Right.
term. I mean, is Apple also, I mean, I'm curious about your trade as you continue to talk about it, Alan. I mean, add anything you like. But is Apple, I know you like it for now and you're looking at this trade. Is this something that you think you would like for the long term?
Oh, absolutely. I mean, Apple's not over. They will continue to reinvent themselves. And if you just look at the profit that they make each and every quarter, they've got plenty of money to venture into other things. People are sometimes disappointed with their growth. But how much money do they make each and every quarter in pure profit? Now, the way to play is also very important, because I'm looking at a 160 call, which is below that point. I've got 3 months of time. Let's see how the market responds. But the key for me is this money flow, and I'm seeing money flow accumulation on the long side of options, and that tells me that somebody sees something. And like I said, the implied volatility is low. If the market was if the options were very scared, the volatility would be higher. So the options markets are telling us some positive things.
All right. Next up, Coca-Cola trading around $60. Your thoughts?
Boring. It's very boring. But a lot of trades are boring. It's about making money. It's not about having fun. It's making money is the fun part of trading. So this is a boring stock. Now, it's negative over the last 52 weeks, and it's also negative over the last 2 years, whereas the Dow's up 22% in the last 52 weeks. So it's got some catch up to do. It's been between 55 and 65. This is a very simple chart, sideways. 60 is a pivot. We popped up here to the 60 level. A kick, to the range top at 65 is what it looks like. And then a breakout eventually till maybe 75. But there's money to be made between 60 and 65 because these options are very cheap. The volatility is low in this stock as well. So what I'm looking at is a January option because the volatility is low. A January 55 call trading for about 7 or so. It's 550 in the money. And so it's positioning for this to have a little Coke and a smile. But it is boring. Just let you know, it's not something you have to watch on a minute-by-minute basis or even a week-by-week basis. This is going to be a boring play, but look for Coca-Cola to perform like it always has.
Coke and a smile. Boy, how I love those commercials. That's when there were manned toll booths. We don't even have that. We have Easy Pass. We don't even have manned toll booths. We don't have Coke and a smile. I don't know. Ben will give us a smile as he takes a look at the chart. Ben?
Nicole, I was told a long time ago, if you're doing it right, then it is boring when trading, right? And that's because you don't want to see those major swings in your P&L. You don't want to see, major down days. You want to see kind of that steady grind to the upside, right? Slow but steady results here. And I'd have to agree with Alan in terms of this one. Should we get above 60 here with some conviction right now? Yeah, we could open up a door for a retest of 65. I'll show you why in a second, but I wanted to begin first and foremost with just the rally we've seen off the October last year lows, because those that have been holding on to this one, that have been long shares of KO, have been smiling, right? No indication here that this one's losing its fizz at this point. Holding these upper levels here up around the $61 level. I went ahead and identified some of the areas that my eye was drawn to along this trajectory to the upside here. And well, take a look here. Small increments, right? So we're talking, it wouldn't take a lot to invalidate this trend up, currently bouncing around 60, testing areas around that $59 level, which have held. So that's the key area, kind of line in the sand right now. But again, Alan mentioned 60, and I see it's sort of a pivotal area right now, See, we're holding above it right now at 60.54. Take a snapshot of this image here, though, bottom left, top right, how we're kind of just sideways more so recently than not, because as you step back here, you're going to see we're going to add a little time on. We're moving away from the October lows, and now we're looking at a trade going all the way back to, we're talking May of 2020, the spring of 2020. We were trading down around 36. Before you look over there, I want to point to the fact that this is the move we just looked at, right? But a very similar depiction in terms of this bigger picture move, right? High conviction throughout the beginning of 2020 into the end of 2021. And then you can see since topping out end of 2021, beginning of 22, we've been a little bit more sideways here. So similar pattern, though. We can identify these areas of consolidation. So Alan was talking about the potential to work our way above the 60 or to that $65 level. I completely agree with that. In fact, I'd point to 67.20, those highs that you remember we saw back in the beginning of 2022, because we always talk about this kind of wave pattern, this horizontal development that occurs very random within this range. Look at these two recent tests of the key area around this $54, $52 level that held. Again, I want to point to the fact that now as we build momentum through this middle of this range, it does open up a door for a retest of that upper extreme, again around 67.20. Let's check out where we are relative to the 50, the 200, because they're going to help us get that gauge of enthusiasm, recent enthusiasm or lack thereof, and here it is. I mean, look, we're holding above both of those. The shorter dated, the blue line, the 50, you got strength above the 200 ever since last fall. Keeping an eye on RSI, we really want to see this expand here right now to accelerate this momentum to the upside. Bulls in charge here, it looks like. I support this one here right now, especially up and through 60, Nicole.
Yeah, understood. Yeah, and when you look at the chart, the long chart's even sort of boring. I mean, other than that sell-off in October, I see where you're coming from. There were some little pieces of news over the last few weeks. I mean, the first is that Subway sandwiches has chosen now to switch. 2005, Coca-Cola has been the provider. They're moving over to Pepsi, exactly, for the next, I guess, decade it is. So that's not great for Coke, but I don't think it's going to make or break the situation. The other is for our Jewish friends. Coca-Cola actually, during the time of Passover, makes Coca-Cola with yellow caps. So, in fact, it has real sugar, which is good for Passover. So I thought that was a nice little tidbit to add. Let's get to C3 AI.
Days.
Go ahead.
There's 300 days in that option, so that's what I'm looking at. And it's just about the math that if we get a move up to that range top, which should happen eventually, if you're looking at the market and this has some catch up to do, then those options gain, 75%.
All right. Yeah, you have time for that. You're absolutely right. Let's get to C3 AI as we talk about the AI craze and where we stand here. This has been over 1 year. It's up about 10%, sort of a little all over the place. Your thoughts on this one here, Alan Nuckman?
Well, I'm no machine, but I think you can learn a lot from this chart. This chart tells me so many things as a trader. Now, we trade in a range for the longest time for 8 months. And then we had a breakout, okay? We had a breakout, and if you remember, I think we did this play a couple of months ago. And, I use those breakouts as opportunities. I put in profit targets, so when I get 50% gain in the right options, I'm going to take half my position and take 100% on the other half. So that worked out. Now, this is a second chance chart. This stock has come all the way back down and filled in the gap. So in the big picture, we're between 25 and 35 for these last 8 months. We're come back to that base, that breakout, as stocks often do. So this is a great chart. This stock's down 4% on the year, whereas tech's up 10%. It filled the gap, which is huge. Now we can look at this support point. The support point at 25, I'm looking at a June 25 call. And we also see this money flow come back into the stock now that it's filled back in the gap. So I want to be positioned for a secondary breakout here and another leg higher. And this AI stock is looking good if you look purely at the chart.
Okay, and Ben will do exactly that. Getting technical here, Ben.
Yeah, Nicole, for me, this one's gone from A-I-I-I to A-I-E-I-E-O. Look out below. I mean, this one really coming under pressure here. I don't agree with Alan in terms of the chart here. I think that this one is almost the mirror image of what we were talking about a minute ago in terms of Coke taking out that key middle of the range that we've been in and potentially seeing some upside momentum. Let's take a look. Longer-term trend to the downside here and taking out a key area balance here lower. So kind kind of feeding into that bearish narrative here. Again, once you take out the middle of this range here, you open up a door for a retest of these lower extremes here. That would be around $23. Now, remember with Coke, I told you to kind of take that mental snapshot. You're going to see, and I want you to do the same thing, because you're going to see almost an identical situation, that mirror image of what we talked about. Coke trend to the upside. Look at this longer-term chart with AI shows, again, even further weakness here. That kind of a disappointing pattern if you're bullish this one, if you've been holding on to the stock for a while. Currently balancing around 28 here right now, and as mentioned here, just below that. So again, you've got some lows that you've got to keep an eye on should we see further weakness, and we'll show you where we are relative to the 50-day moving average, as we just took that out as well. So again, this is like the mirror image of Coke. I'm surprised to see Alan speaking about bullishness here, but one thing I'm noticing, RSI kind of in the middle, hasn't really supported that weakness at this point, but I do want to just speak to that longer-term trend, which has been and continues to be lower.
I'm following the money flow, and the money flow, the long accumulation here is what I see. So somebody sees something more so than I do, and we had this exact same conversation about 3 months ago. And so if you go in the Wayback Machine, go to the archives, we'll see what Ben had the exact same commentary, and guess what? It rallied up to almost 40. So I think it's set up once again. And you know what? We'll see.
Where's the Wayback Machine parked? I'd like to go there. Thank you, guys. It's great to see you both. Alan Nuckman.
Network Archive.
Wonderful to see you both. Really happy that we had a great Big Three today. As always, took a look at Apple, Coca-Cola, and C3AI with Alan Nuckman at bullseyeoption.com and our own Ben Lichtenstein there on the charts. Thank you both.